you can join the presentation to see why, or you can stay here on YouTube, but I'm going to be looking this way, and you don't get to see all my cool charts that I'm going to have either. So, but yeah, whatever floats your boat there. Hey, what's up, YouTube? If y'all are watching this on time delay, go like 3 minutes into the future. That's when this presentation is actually going to start. So drop this message in first time. You should join that as well if you're just watching. Link for tonight's chats. If y'all got any other questions, you can drop them in there. Link for tonight's chat on the housing market reset. Boom. Cool. All right. So my link is up live on YouTube right now. Feel free to log in with that thing. So I'm going to be going live in about 3 minutes on, oh, actually I'm live right now. But I'm going to start this presentation in about 3 minutes on YouTube. YouTube. And so yeah, so I'm setting this up right now. And the cool thing about joining is you can actually have some input on what the topics are as well. Because like the last 3 topics I've done have actually just been like suggestions from people in the group, because you know I'm just doing it for I do it for the people. I'm a man of the people. So what's up, YouTube? If y'all got questions, drop them in the chat over there. All right, I'm just getting everything set up. So I'm going to start at 8 o'clock Eastern Standard Time. So in about 2 minutes from now, I'm just getting everything set up here. Let me go to my channel, your channel. I got to edit this video, your videos. Your video, so go to my live video. Oh, and also for the folks that were asking about the don't buy grandma's house thing. So you can actually, there's actually a video I dropped today on like actionable steps on how to not sell grandma's house. You know, everyone gives like this platitude about, you know, don't sell grandma's house, yada, yada, yada. But like, what do you actually, you know, what actionable steps does a person actually take not to sell grandma's house? So I talk about that in the video I dropped today. All right, I'm being live streamed. Got it. Let me share my screen. Oh, why can't I share my screen? Okay, there we go. Share my screen. Boom. Boom. There you go. You see, y'all can see Jerome Powell. Let me see. Whoops. Oh, things like this. Can you guys see? What does a reset mean? Okay, we're about to get to what a reset means. Boom. Okay, there goes my man Jerome Powell. All right, okay, cool. So there goes me. All right, what's up, y'all? Y'all may want to join me on YouTube. I'm about to go live. Screen sharing is paused. Why is this paused? You are screen sharing, okay. Let me just see some real cute. Why is my screen sharing paused? Okay. Okay, so 7 o'clock. So let me start this presentation. Okay. Okay, cool. Sorry, I'm about to start right now. What's up, y'all? Appreciate you joining me. This is a presentation as part of First Time Homebuyer School. So this one of the topics that kind of came up this week was kind of dabbling into last week, dealing with, you know, what's going on with interest rates, the home prices, and blah, blah, blah. And so the reason I picked this term because Jerome Powell, the chairman of the Federal Reserve, talked about they're raising rates due to a housing market reset. And so that's kind of a vague term. The reporters kind of asked him what he meant by housing market reset. So he talked about it a little bit, but I want to dive into what I think a housing market reset is by using the words he used in his actual speech. So throughout the years when it comes to home prices, inventory, interest rates, etc. So about to jump into that. So let's get into it. Hopefully y'all can see it because I can't see your screen. So hopefully you can see what I'm seeing. All right. So what is a housing market reset? So Jerome Powell said a housing market, so spiking mortgage rates could help solve or help, excuse me, help to achieve a housing. So we're going to talk about what he meant by that. And so the first couple of slides are going to be breaking down what he said in his speech, and then I'm going to go into some actual like historical data to go into what my interpretation of what his kind of vague statement was. So he said, if you are a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. So that's what he said as far as like what his goal is when it comes to a housing market reset. One more slide, talk about what he said. So he says, we're in a difficult position, a difficult housing correction. New home sales and existing home sales are down 29.6% and 19.9% year over year. Such a downturn leads to rising inventory levels and a risk of falling home price. So what the Fed is trying to do is they're trying to get back to a balance when it comes to the markets. And basically this whole supply and demand, basic economic principles are like supply and demand. If the demand stays the same and the supply is low, prices go up. If the supply goes down, I don't know for what I got. If the demand, whatever, I forgot which one I just said. But if the supply is low, demand's higher, or demand is low, supply is low. That it basically increases prices. You know what I'm trying to say? Sorry, I kind of fumbled my words there. But he's basically trying to rebalance the housing market. So why is the housing market unbalanced to begin with, right? So it's unbalanced because when we look back at like COVID, you'll see the charts I go through in this presentation. But what happened was COVID, there was lower inventory, and inventory has actually been decreasing year over year. But the inventory was low due to like supply chain issues due to COVID, and the demand spiked because of low interest rates. And why were interest rates so low? Is because the Federal Reserve artificially kept the interest rates super low. So the Federal Reserve is just trying to kind of fix what they did as far as making rates super low, which was trying to avoid a collapse in the economy or recession was kind of their goal. But now when you swing too far one way, things get too volatile the other way. It's kind of what happens in situations like that. All right. Sorry, let me go back to the slide. Okay, so let's get into some data. And so I think it's important to actually like step back and look at like the data, look at the numbers, right? Because a lot of times folks are like, hey, the housing market, first of all, when folks say the housing market is crashing, no one actually has a definition of what a housing market crash is. People think like a home price being reduced on Zillow is a housing market crash. If that's your definition, that's your definition, but that's not what I'm rolling with. So there's no official definition of a housing market crash, but if you ask me, my opinion of a housing market crash is like home prices go down 20%, or like home prices go back to the level that they were like 2 years ago. Because in my opinion, you should never be buying a home unless you plan to hold it like 3 to 5 years anyway. So like anything that happens within that year time frame, hopefully the price goes up. If it goes down, you shouldn't, because your idea is not to flip and like be in and out owning this home. But so let's look back. And this is also what I tell folks, like home prices, if you look at this chart, you'll see that home prices go up, right? And so we jump back to 1998, because this is a 25-year chart. So 1997 is when this chart starts. And we can see up here in the 2008s, this was the housing bubble due to like reckless lending habits and all that. And so if you're thinking, hey, is this going to be like 2008? I got a slide for you at the very end of this. But the answer is no, in my opinion, due to various reasons. The biggest one being that 2008 high inventory and reckless lending habits, right? And so we got the 2008 housing bubble where it was just the wild, wild west. Things were going up, 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 up. And then boom, things imploded down here. And it took about 5 or 6 years for the housing market to recover to the inflated 2008 levels back right here. As you kind of see, home prices going up. Home prices pretty much gone up, 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 up since like 2012 and to 2022, so like the last 10 years. And so, right here, I think during this incline, like right here, the housing market was going to wow, and everyone was saying home prices can't keep going up. They can't keep going up. They can't keep going up. And so I think educated folks and non-biased folks on this topic like me were like, of course they can't keep going up at this level. Like nothing's going to increase at this meteoric rate, which is like a 43% increase. But yeah, home prices will most likely continue to go up, but they're obviously going to tail off at some point, and the inflation, or not inflation, excuse me, appreciation will go to its normal like 1 to 4% levels, which looks like it's what's maybe happening this year. Because like I said, home prices were up like 43% at 1 year. So like you saw that quote from Jerome Powell that basically home prices are down like 29.6% year over year, right? But that's compared to when it was at like it's at like all-time highs, right? And so once again, it's just important to look at the whole big picture when it comes to home price. But historically, home prices always go up no matter what's going on. They just don't go up every single year or every single day. Only bozos think that. And so we're going to zoom in for this conversation, right? So home prices the last 10 years. So this is basically after the housing crash, and things kind of got back on schedule. Boom, boom, just kind of going up. It kind of like a 30-degree angle essentially. So let's see where we're at, where we keep going. So home prices the last 5 years, once again, they're just going up. And then we're going to zoom into what's been going on this year, 2022. And so when folks look at what's been happening like in 2022, it's a very like micro, like short-sighted. I can't see 2 steps ahead of what's going on in life perception of the housing market, because folks will tell you, hey, I saw a home that was reduced by $20,000. I saw a home reduced on Zillow. The housing market must be crashing. Like no asset class goes up at a 45-degree angle. Like that just doesn't happen. And so if you look back at home prices within the last year, we can look back and see where they were in October of, well, let's look back in September of last year compared to where they're at right now. So they've been kind of slowly declining from their all-time highs around this area. They're on this level in like the in the May, June timeframe. And so once again, if we zoom back out, right, we'll kind of see that home prices are going, they go up, they come down, they go up, they come down. So they quickly, right? So they're going to come down, pretty quickly too, and then eventually level out and then continue to go up at some point in time. The question is, like, what point in time will those home prices actually go back up, right? And so once again, if you go over what I consider like a housing market crash, so in order for the market to crash, like housing levels will have to get back to this 2020 level. That's my opinion of a housing market crash. And so like we're looking like in the, I think like 280 is where they were back in the 2000s. So in my opinion, for the housing market to be considered like a crash, like home prices need to come back to where they were basically pre-COVID, which is a very, 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 very steep decline for that to actually happen. And so that's what I think, and that could be what the Federal Reserve means by a housing market reset. When we talk about a reset, we're going back to an actual like point in time, where it's kind of resetting things from when the housing market was kind of out of control due to those low interest rates, which is why the Federal Reserve has been increasing interest rates. And to be clear, the Federal Reserve, honestly, they don't really care about the housing market. Their goal is to stymie or stem inflation, right? But how do they stem inflation? They need to reduce the housing market to stem inflation, right? Because inflation is everybody just spending money. The value of the dollar is basically going down due to inflation, right? And so what their thing is, like, the majority of people, like, their net worth is tied up in like their home. And so everyone's biggest asset is their home. So like if somebody bought a home in 2020 for $300,000 and now that home is worth $420,000, they're probably going to be a lot more loose with spending, right? And so the Federal Reserve is not directly trying to tank the housing market, but they're like, hey, if we stymie or stymie some of this hot housing market, that what we're going to do is we're going to basically decrease people's willingness to spend money. So that's kind of why the housing market is taking the brunt of this inflation stuff, or this interest rate hike in the news and kind of everywhere else. Hopefully that made sense to you. All right, and so let's go back. So we're just going back forward. So this on prices for this year. So bam, here's another quote from Jerome Powell's speech. I'm not going to read the whole entire speech that he has, right? But so he I'm going to read this one blurb right here. Feel free to read the whole thing, or if you're watching this on delay, you can pause and read it yourself. But so he said there was a big imbalance between supply and demand. Houses were going up at an unsustainable fast level. They were just going, zoom. Like I said, they went up. Home prices went up 43% at one point in between 2021 and 2022. Right? That is kind of crazy. But it's cool if you own property. So depends who you ask. And so we're going to take a look at housing inventory as well, because once again, we talk about that supply and demand, the basic economic principle, supply and demand. So if the demand stays the same and the supply goes up, the value of something increases. If the demand stays the same and the supply goes down or it stays low, the value of that item increases, basic economic supply and demand principle. So I think it's important to zoom out and look at the inventory over the last 10 years as well. And you got to see, even pre-COVID, like inventory was dwindling right here as well. Whoops. Okay, so pre-COVID as well. And here's the inventory, housing inventory the last 5 years. You can kind of see housing inventory was dwindling here as well. And we're going to look at inventory the here. And so inventory is coming back a little bit, but it's not to, we're still at low inventory. So right now, the overall, basically what's called the inventory in the market is like a 3 point, when I last saw it, this is actually about a month and a half ago, so maybe more right now, but there's about a 3.3 month supply of housing inventory. So that's an important number as well, because like a 6 month inventory is considered like a neutral market between buyers and sellers. And so right now the inventory is low. And so even if the demand stays the same, home prices are still kind of elevated. And so that's another reason that the Federal Reserve is trying to increase interest rates, because they can't make people sell their homes or put more homes on the market. Like builders have actually stopped building a little bit, but they can decrease people's ability to afford homes at a high level by increasing the interest rates. All right, so inventory last year. All right, so let's jump into another part of his quote. It says, for the long term, what we need is supply and demand to get better aligned so that housing prices go up at reasonable levels and a reasonable pace, and people can afford houses again. So once again, they're trying to tame or slow down the housing market in order to slow down inflation. And so spiking mortgage rates could help achieve a housing reset. So once again, they're trying to increase the rates in order to achieve a housing reset. And so, one thing about rates right now is they're high, but I think there's a lot of people who just started paying attention to the real estate market like 2 years ago when home prices were going out of control. And that's real estate, that's investing. There's a bunch of new people in the real estate space that their knowledge with real estate just essentially started in 2020. So they have no idea where rates used to be prior to 2020. They just think, hey, interest rates have always been in the 2 and 3%. It's kind of what a lot of uneducated people that are uneducated on this topic seem to think. So we're going to zoom out and kind of look at where interest rates are historically as well. So we can kind of look at, and so interest rates are high right now, but I always say high in comparison to what? And so let's see what the interest rates are high in comparison to, right? Okay, sorry, I guess I threw this chart in here, so I forgot about that. And so this is just a quick chart showing basically the change in home prices since May. So you can kind of see on the West Coast, looks like in Cali, I think that may be LA, this dark red, is that home prices are kind of changing right now. So they're down like 10%. But I always want to point out they're down 10% from going up 43%, right? So when people are like, hey, I saw home price reduced on Zillow, it's like, okay, like a home price was reduced 5-10%, but it went up for like 43% over the last year. So I think it's always important to balance that when you're looking at a home price being reduced here and there's like, it was reduced in comparison to like what price that it was a year ago or 2 years ago, right? And so you can kind of see for whatever reason on the East Coast, home prices are still kind of holding steady. It's even increasing in some areas, but it looks like it's kind of tampering out or kind of leveling out. Like I said, most experts think that we may in the year somewhere between 1 or 4% appreciation on home values. And so the Federal Reserve, I think, wants to actually lower that number. Okay, cool. So here we are. So let's look at interest rates the last 8 months, right? And so once again, everyone's perception of the housing market is kind of back here in this February timeframe because rates were in the 2s and 3s for like a solid 2 years, right? And so rates got into the 4s, not to the 3s. I remember they got to the 4s at this point where it leveled out right here. Was that a lot of folks kind of stayed on their hands and were like, "Hey, I'm waiting for rates to go the 2-3% threshold." And I remember being like, that was a blip on the old radar, and you'll see what kind of blip it was on the radar when we zoom out. But yeah, I know some folks hopefully locked in their rates are like that in this 4% threshold. But yeah, rates have just kind of climbed crazily this last 8 months. And once again, this is an historical increase in rates because they've almost doubled in some areas. But you got to think about it. They were artificially low due to the Federal Reserve. And then they're artificially high due to the Federal Reserve. And I actually saw an article, I saw an article this morning where the average interest rate as of today, September 27th, was 7.08%. So yikes. But let's zoom back out and see where interest rates have been just historically, right? And so once again, the last year, this is going back to October a year ago. So that is a heck of a increase in rates. Kind of looks like the housing market increased the last year or so, right? But let's jump back. Okay, so this is an important chart. So let's look at rates the last 5 years, right? So this is when I got into the mortgage industry back in 2008. So I remember rates being like the 4s and 5s. That was just kind of where normal rates are. So that's why, when I look at rates like in the 6s, it's not that huge of a shocker to me. It's just like, okay, that's where it's a percent above where rates were when I got into the mortgage industry myself. And so, like I said, we had this historically low blip right here in 2000. This kind of this COVID blip in maybe that's COVID right there in 2020, right? Is that the boom COVID blip, and then they kind of leveled out right there because the Federal Reserve was trying to stabilize the economy, right? But I got another chart here. Okay, cool. Whoops. Okay, so and once again, let's zoom out for the last 10 years. And so if you look at the last 10 years, yeah, we're definitely above where we've been at any point in the last 10 years. So like I said, rates are high right now. Rates are high right now, but they're not as high as they've just kind of been in the past. So this 2018-19 time frame we're here, like I said, rates were in the 5s, and people were buying homes, and folks didn't think that the world was going to collapse or that somehow the housing market was going to collapse because rates were in the 5s. That just is what it was, but it just kind of been increasing slowly in that time frame. I think I actually bought my last property right here. I got like a 3.5%. What do you know? Congrats to me. And so I read this article in Fortune, and so I want to kind of read some things they pointed out as far as the article, and I wasn't going to paraphrase it. I'm like, let me just credit the person that put together this information, right? So once again, the mandate from Congress is to basically stem or stymie. I know I keep messing up the word. They're trying to stem inflation, right? That's what the Fed's trying to do. They don't really care what happens with the housing market, right? So it's to maintain maximum employment and stable prices. That's what the Federal Reserve is trying to do. But as long as inflation remains above the Fed's 2% target, I think we're at 8% right now. Powell says the latter will be the central bank's main focus, stable prices, even if it means pushing the economy into recession to achieve it. So they're trying to balance the market back again, but they try to stop a recession now, and they're like, hey, maybe we got to cause a recession to just stave off this meteoric rise in prices. And so they're trying to basically trying to cause a recession because folks don't want to spend in a recession, so that will kind of combat inflation. That's just how the market flows. Like, we have a great market, we go into recession, bull market, bear market, bull market, bear market. That's what just happens with the housing market. And so see the Fed's housing reset return us to a balanced housing market. However, the Fed's mandate from Congress isn't to ensure affordable housing, but to maintain maximal employment and stable prices. Once again, employment, stable prices, that's all the Federal Reserve cares about. When it comes to the housing market, they could just be a casualty of what Powell and friends are trying to figure out. And so once again, taming inflation. So as long as the housing market, basically trying to keep inflation under, trying to get it down from 8% to their 2% goal is essentially what the Federal Reserve's mission and agenda is here. And so will this be like 2008? You know, everyone says this 2008. I'm like, tell me you have no idea what you're talking about without telling me you have no idea what you're talking about when it comes to the housing market, when you talk about this 2008 stuff, right? Because 2008, there were reckless lending habits. Like that was the main catalyst when it came to 2008. It was reckless lending habits. And then number two was like an right. So if we look back at the chart as far as inventory, like inventory, remember the chart was that we look at now was going down as far as inventory since like that time frame. Inventory was through the roof, and anybody and everybody that have had a pulse could get a loan. There were no credit checks. There are no income checks going on right now. And so folks will be like, oh, what about their banks right now with programs that have no credit checks and all that. That is not true. You're very uninformed if you think any bank is lending anyone money without checking their credit, whether it be traditional or non-traditional. That is just not a thing that exists in 2022. When we're talking about major lenders that have to go by Fannie and Freddie Mae guidelines. So if you're talking about like some hard money lender or something like that, that's a different story. But if you're talking about just a traditional mortgage, yes, everyone is evaluating your credit in some shape or form. And so when I talk about like reckless like lending habits, so let's look back at this chart right here. So look at the number of people with 760 credit scores that got mortgages compared to back in 2008, 2009. The majority of people back then had these low credit scores, like basically sub 660 compared to now. The vast majority of what is this, like 75% of loans, people have like a 760 or above, and really almost looks like almost 80% of people have like a 720 or above when it comes to credit scores, and very few people actually have like that 660 or below credit score when it comes to having homes. And we're talking about like the last 3 years, if you look at the chart. So this is a great chart to look at when we're talking about the quality of people that are getting loans lent or getting money lent to them. And so credit score, always a credit score, whether you like it or not, it's just a snapshot of your financial health. So let's go to the next chart. And so this kind of, to me, it eliminates the whole reckless lending habits thing, as you kind of see looking at this chart right now. And then another thing that was going on in 2008, there were a lot of adjustable rate mortgages, right? And so look at the number of people or percentage of people that have ARMs or adjustable rate mortgages now compared to 2008. So this is when this reckless lending was happening, right? And so people were getting like these ARMs, and it was just like, hey, don't worry about what the interest rate will be, 1 year, 2 years, 3 years, 5 years from now. You can just refinance again because it'll be all good, no credit checks and all that. And so rates went up, but then also like lending habits got a little bit stricter too. And so people that could previously qualify for, when I'm saying qualify, like air quotes, qualify for loans, can no longer qualify. So they couldn't refinance out of these ARMs or adjustable rate mortgages they were in. So look at the percentage of people now with ARMs compared to then, plus looking at the people that actually have good credit. So, and then the last thing, this is a cold chart as well. So this is basically percentage of people that have a loan above the current market, right? So rates are high now, but it's not like every person all of a sudden their rate is like 6%. No, people get 30-year loans and they lock in their rate. And so 99% of people with mortgages have a mortgage under the current market right now. And so basically everybody that locked in their rate in 2020, 2021, early 2022, they're completely fine right now. Like their interest rate is low, their mortgage payment is locked in. So they're all good right now. So just kind of like in summation, like I said, I think the Fed's goal is to basically stymie inflation by kind of taming the housing market, right? And so by taming the housing market and kind of cooling down home prices. So I think that what they're trying to do with the reset is kind of go back to where prices were like in that 2008 20 time frame sort of, and also they're trying to, excuse me, and also they're trying to basically cool down the housing market, and their goal is to do that by increasing rates. So they can't do anything with the supply. They can't make people sell homes, or they can't make people build homes, but they can make people be reluctant to purchase homes at a certain price because they're just super unaffordable right now. So that is all I got for the presentation. Thank y'all for joining me. If you have any questions, just drop drop an X, and I know a question is coming. But outside of that, I will log out of the chat unless I have any other questions from you guys or gals, and that's on YouTube or Instagram. So if you guys got any questions, let me know. I'll log out in about what do you call it? I'll log out in about 10 seconds. So appreciate you guys. So if you have a question, if you got value out of this, feel free to give it a thumbs up on the video. But I'm going to be logging out in 10 seconds. If you got a question, drop X. So 10, 9, 8, sorry. What if I can't count? 7, 6, 5, 4, 3, 2, 1. Okay, cool. Appreciate you joining me. That's all I got for tonight. Tell a friend to tell a friend about what we got going on here. And until next week, if you have a question about a topic, feel free to drop it in my first time home buyer community. Thank you. Okay, how do I stop this? Of course I can't stop this live presentation. This is awesome. Oh. All right. Okay, there we go.